And before I come to this, we start this our webinar. Let me explain you little few minutes for the about the credit market situation. Before you come to the capital market, we'll go for the we'll go for the credit market situation. In present scenario, if you see debt diversification, because the age-old term loan and cash credit are today not being practiced in modern banks. The cash credit has been replaced by commercial papers and many other instruments, and this term loans is replaced by the deferred payment guarantee and many other instruments. Apart from that, the blue chip companies and top companies, they are procuring the funds directly from the market to avoid the cost of disintermediation. Under such scenario, the credit uptake is gone down. To buttress the fact, you will agree with me that this recessionary trend has exacerbated the situation, so that the credit uptake is a little bit diminished over the years, and banks are flush with the funds. The liquidity is very high. Under this condition, it is very difficult for the banks to, if they are unable to deploy it and the funds are flushed. If such a condition arises, banks have no other resource but to what is this interest rate. Over the years, you will be observing. Hello. Hello, Mr. Ashok Mahanti. Hello, Ashok Mahanti, your आवाज is आता है थोड़ा सा. You can mute it. Please mute it. It is disturbing. Madam, please mute it. So, the situation, the loss of the funds in the banking industry has compelled the banks to cut down its interest rate. When the interest rate is cut down, the customers are searching for the alternative avenue. Stock market is a certain alternative avenue, and how funds will be doubled or funds will be increased, the income will be more. That is today's guest speaker, Dr. Sarath Malik. Our guest speaker, Dr. Sarath Malik, has enough experience in the stock market, and he has worked several years in Reserve Bank of India. From Reserve Bank of India, he joined in SEBI. And SEBI also, he worked and superannuated. Before superannuation, he was Chief General Manager. He is also a chairperson for Indian Corporate Affairs and guest faculty to many of the organizations. He has enough experience in the field of this stock market and wealth management. Today, his wisdom he will be going to share with us, and we are eagerly waiting, sir. And please, it is over to Dr. Malik, and please explain about us, because many of us are beginners, and as a beginners, what is the scope is there, just like the strategy, how to unlock the profitability, what are the risks involved, and what are the different, what is the primary market, what is the secondary market, what are the different type of, all these things for what approach we will adopt it, so as our funds will be safeguarded. So in this regard, we request you and to give your lecture to all of us, sir. Over to Malik, sir.
Thank you, Mr. Misra. Thank you very much for giving a good introductions. So what I will do is that let me make these presentations from my let's say my iPhone, because here I am unable to do it because the picture is not coming very clearly. So if
Okay.
you permit me, so I will
Go
leave
ahead, sir.
this.
Go ahead.
Yeah, okay. Thank you so much. Thank you. I think this is better.
Yeah, yeah.
Yeah, so sir, thank you very much. So I'll start doing from my iPhone. It's a pleasure to talk to my fellow colleagues about stock market investments. So can you please start the slide, please?
Who is there in OCF?
Om Prakash,
Hello.
somebody was doing the slide, showing the slides.
Mr. Om Prakash, are you there? Please help Dr. Malik.
Yes. Yes. So why I write stock market investing lessons and cautions? Just a minute. The second slide. You go to the first slide. First slide, please. First one. Yes. First one, please.
That is-
Yes, please. So,
ଜଣେ କିଏ ଠିଆ ହେଇକି କହୁଛି ଶରତ କୁମାର ମଲ୍ଲିକ with the co-host now ଆପଣଙ୍କ କଲେଜକୁ ଯାହାକୁ ନେଇଥିଲି ତାପରେ ତଳେ ଗୋଟେ ଚାର୍ଟ ଉପରେ ଗୋଟେ ନାଲି ଉପରେ ଦୁଇଟେ ବାହାରୁଛି
So why I chose this topic, stock market investing lessons and cautions, because many people are not aware of how to make an investment, how to make a financial planning, okay, how to put their money in different investable instruments. So even if you are a highly educated person having the highest degree, maybe a PhD or MA, MCom or CA, or you may be a medical practitioner or whatever field you have, but not all are financially literate. We are literate because we know read and writing, we know our subject. But to become financially literate, it is a very, very difficult task and it's a special task. Okay. So not it's everybody's cup of tea. So stock market is highly technical subject and one has to know the details and must understand this thing before entering into the investments, into stocks, bonds, debt instruments. So that is the reason many individuals have learned the lessons of when they have been guaranteed that they will get 40%, 50% returns. So there may be so many Ponzi schemes are there operating in the country, and many people have invested there and they have lost their money. So this is the reason I wrote this topic. The heading of my topic is stock market investing lessons and cautions. So what lessons you should have, you should learn, and what precautionary steps you should take while making investable decisions, because investment is going to help you to have a better life for you, for your family, and for others to whom you think that they are close to you. So this is the topic this evening. So we'll be discussing in detail. So next slide, please. Next, yes. So before we go to the stock market, we should know what are the regulatory mandate we have. So SEBI was, as you all know, that set up in 1988, and it was given the status of regulatory status in 1992 when the Act of Parliament, SEBI Act was passed in the Parliament. SEBI Act was passed in the Parliament in 1992. So SEBI has the mandate as a regulator. The basic mandate is to investors protection, those who are coming to the market and investing in different instruments, let's say in IPO, secondary market, mutual funds, and other related instruments. So the basic, the most important job of a regulator, SEBI, is to protect the investors. Because if you do not protect the investors, they will not come to the market. Basically, the people, since India is a banking-oriented system, as Mr. Misra has mentioned, so people go to the bank, they put their money, they are very well aware of the banking products, whether it is savings deposit, fixed deposits, or RDs, or whatever. So people go there. Still now also majority of the populations, they rely on a bank's deposits because they understand the products. So here this investors protection is the most important objective of SEBI. Then let us see the market development. It's the evening role of SEBI is that it's legislative, executive, and quasi-judicial. So SEBI formulates legislation, that means guidelines, regulations, and others. And it's a quasi-judicial body, means it passes the orders against any market manipulations or the person who is doing the fraud. And it is challenged in the court of law, that is the SAT. So let us see what are the legal framework. So as I said earlier, SEBI Act was promulgated in 1992 by the Parliament. And Depositories Act 1996 and its regulations. Depositories Act means when the physical shares were there in the market, and that was creating problems for the investors as well as the market participants and the companies. So now all your shares are dematerialized. You have like a bank account, post office, you have a deposit, you have a passbook where your credit and debit of your you see the shares you buy or the amount you get, money you get. And some of the provisions of Companies Act 2013 is also applicable for securities market. Then the Securities Contract Regulation Act 1956 was there when the stock exchanges were recognized, and in 1956 securities market was there in the operations. Securities market is as old as the banking system. So if you talk about the banyan tree to e-trading, a book which I have written, and it was inaugurated by the Prime Minister. So in that book, we have discussed that since 19th century, how the stock market was there in Bombay under a banyan tree. And since then, now it is 2023. So banyan tree to e-trading, how the technology has taken, played a major role in making the market efficient, transparent, and investor friendly. Then we have the appellate mechanism through SAT, Securities Appellate Tribunal. If there is any grievances, either from the SEBI side or from the entities against whom SEBI has passed the order, so both the parties can appeal in SAT. And if they are not satisfied with the SAT order, well, they can straight go to the Supreme Court. They don't have to go through a high court like other cases, your civil and criminal cases where you have to go through the judicial system like district court, then high court, then Supreme Court. So here in case of securities market, so the cases can go from SAT to the Supreme Court. Next slide, please. Next slide. Yes. So let us talk about money. What is money? You all know that. So actually, if you have a lot of money, you have a lot of wealth, it doesn't buy you happiness. Even if somebody says that a very wealthy person is very happy, a rich person very happy, is no, it is not. But if you have money, you have choices. You have a lot of choices through which you can, through money, you can have more choices, have a comfortable life. But if it is that those choices can make you happy, okay? And but if you buy the things what you do not need, you should have to sell the things that you need. So suppose the things which you do not want, but you buy it, again you have to sell it. So it is very, very important for everybody, each one of us, to know how to manage our money. How to manage. You may be knowing how to earn money, how to spend money, but how to manage your money. Underline it, how to manage your money is very, very important at this point of time. When I don't want to refer to other economic parameters like your future, your inflation rate, like how prices is going, prices of each commodity, all essential commodities and non-essential commodities are going up, and your children's education, so your marriage, your retirement, your daughter's marriage, and so many things are there. So for that, you need to have your money, how to manage your money, that is most important. That is most important, which many people in India or in Odisha, they do not know. So sometimes they fall trap into some fraudulent practices or persons, and they lose their money, or they get cheated by some people. The next one, please. Next slide, please. Yes. So there is a difference between savings and investments. So basically, the people think that the money which you earn is income and you keep aside for your future needs instead of spending. So that you call savings. So some person with income without, not spending that income, you keep for your future. So that is spending. But if you park these savings in a cash, safe or liquid, so you need to know that you must put the savings in such a way that it is safe and liquid. Liquid means anytime if you want to get back your money for your requirement, so you can get it. And safe means you should not lose the money. Okay. And investment is making your savings work for your return. So how much return you get with the savings you make, if you make the investment, how much return you get. And the difference between savings and investment is the risk of loss of capital. So if you consider that, so it is the risk you are going to take. So next, please. Yeah. What happens to your savings and investment? So what happens to our savings and investments? So households, they save, and they save, that savings goes for investment, and
Have a nice beer.
it is spent in building the economy. And it is also helps in increasing the wealth of the households. The households is particular family, particular unit. But suppose if our savings are invested in financial assets and not in physical assets. So all you know that if it is invested in the both the assets, whether it is physical or financial, you get the returns. But if you invest in financial assets, it is liquid. And this can be reinvested. It can be invested for some productive purposes, and that can be used by the corporates or the companies, those who are shortage of money. So they can, if you put your money in their companies, so they can invest it for creating employment and expanding the capacity building and also other areas. Okay, next, please. So this is the financial well-being. So let us see that what is financial well-being. So financial well-being is an important factor for your happiness, for your health, for peace. So a poor person, if he is not well off, so he cannot spend money for his health, and he will be in search of peace and happiness. But is it adequate money to take care of your needs? So what are your needs? Your needs is your further studies, your children's, and buying a property, and marriages, and retirement, and emergency, medical emergency. So these are areas for which you put your money, keep your money to spend in future. So you must plan for your financial well-being. So arrow which we have given is that health, wealth, and happiness. The three things one has to keep in mind for his financial well-being. Next. Next slide, please. Yes. So let us say how to take care of your needs, the financial needs, your daily needs, your short-term goals, and you need medical insurance, life insurance, and other forms. And you need to invest. You should have a long-term goal or short-term goal or medium-term goal, objectives for which you want to make the investment. What are the avenues available in the banking product? In the banking products, you have savings bank, you have recurring, and post office savings, and money market, liquid mutual funds, ultra short term.
उसको पकड़ लेगा नहीं विषय मतलब वो वाला विषय नहीं है कुछ इम्पोर्टेंट इन्फॉर्मेशन
in the stock market, you have bonds, you have debentures, you have shares, you have pension funds, and you have provident funds. So these are the avenues for which you can put your funds. So if your risk appetite is high, so you can invest in those instruments.
More dangerous than not having different password for different applications.
Okay, next please.
How many mobile numbers that you have? One.
Next please.
This mobile number is so overused. Think of it. A mobile number for bank account, for Google, Facebook, WhatsApp, Amazon.
So let us see that what does it mean? I do not have money to invest. So people think that is that savings is equal to income minus expenditure. But in if you are going for a financial planning, if you are a good a person with good acumen, so you will not consider that equation savings is equal to income minus expenditure. But it is that expenditure is equal to income minus savings. So that has a better objective than the earlier one. Okay. So that means you are forced to save some things, you are forced to have a financial planning for your better future. Next, please. Next slide, please. So let us discuss about what are the steps we need to follow in financial planning. Okay. So what are the steps are first you need to identify your goals. What do you want to achieve? So you must have a goal. Yes, this is my goal, and you need to achieve this, and these are the strategies you need to follow, and these are the steps you need to take. So identifying your assets. That means what do you have right now? What assets you have and what you are going to have in future? Whether the existing assets is going to pay you or give you more returns, or you reshuffle your assets in such a way that you change those assets and buy other assets which will fetch you more return, and you will be happy in that way. And also you need to know that what is your how to identify your liabilities. That is the most important. People know that their liabilities are there. Some people have loans. Some people have some borrowing somewhere. So that you need to identify your liabilities, and you need to pay back those. then consider your future earnings also. You should know that what is your future cash flow, what money you are going to earn in future, whether it's in salary terms or whether your past investments, or you need to get the loan which you have extended to your other people. And consider likely future expenses also. You must know this thing, like your family expenses, your marriage, your buying a house, or children's educations, or even the medical expenses, which is going to be very high. So that one has to consider. So accordingly, you plan, you do a lot of planning for that. Then you putting the investment money in a suitable products. And the suitable products means how much money you will put in shares or stocks or debentures. So depending, or mutual funds, or in fixed deposits or company deposits, or in the banks. So by considering all your requirements, then you go for investments and to have putting your all the money in the suitable products. So suitable products depends on when you are going to get the money. Okay, whether it is sort of you see, it is liquid, and how much returns you are going to get, and how much risk you can take. If you have a very risk appetite, you have a higher risk appetite, well, you can directly go and invest in shares, and in the return you will get more. So that is the chronology. The higher the return, risk, higher the returns. Or if you cannot take decisions in investing in shares, well, you can go for mutual funds, where the fund managers, experts will be managing your money on your behalf. Okay. So people put also money in NPS, people put the money in fixed deposits. So depending on how much return you get, how you are going to beat the inflation, the real return you are going to get. Next, please. Next slide, please. Next, yeah. So that's the reason that investment, where to put in money. So it is called the diversification of your assets. So you have to reallocate your assets in such a way that you achieve your financial goals. So asset allocation is very important. So that's how much money you put in which products. So across the asset classes, various type of products are available, and you that also have you see the companies within that products also. So these are the different asset classes are also available. What we have discussed: mutual funds, shares, bonds, in NPS, in insurance products also, and so these are the products which you have. Specifically, it is seen that the salary class, what they do is that they put their money in PF, and they put their money in fixed deposits. Then they put their money in you see, in NPS and life insurance, insurance products, mutual funds. And after that, if they have surplus money, they should go for buying shares. But those who are very aggressive and those who want to take more risk, and they put their money directly into the shares. So now the share market is very easy. So you can open an account and you can buy shares directly. Either you can buy directly online shares, or you can go through a broker. The broker should be a registered broker. Semi-registered broker. Okay, next please. Yeah. So this is what is the important considerations one has to take. So as we discussed that everybody likes to have returns more. Okay. And safety. Safety is everybody's concern, and the liquidity. So three things. Liquidity is one where you get back your investments at ease.
That chance.
Yeah, returns which you get.
Today chance is there.
Yes.
Chance is there. Meeting.
What is that?
Okay, no problem, no problem. You take care. You take.
No, previous slide, please. Previous slide.
Okay. No, you
Yes.
take care.
Yeah, so this is the returns.
Please,
So
please.
everybody wants that the returns should be high. So
Take
that
care.
is the reason many people fall
You are
prey
in
into
the
the
dentist or somewhere.
unscrupulous people and
Of the
those who are
dentist,
get
right?
cheated. See, when you are getting the
What time?
returns, the average, the returns, the annual returns, if somebody invests, it is the highest if you are investing in shares. Okay, so annual return so far for
Okay.
last 25
Okay.
years. So the returns is very, the highest. Let's
No,
say
you should not.
15
वो consumption नहीं करना.
15 to 18%. And after that, people go for the mutual funds.
Once you get
Return is
three.
less, 8 to 10%. Then if you go to fixed
Those-
deposits, you get the returns is that 8% to 7%.
Friends,
And if you go to fixed
Hello.
deposits, sorry, in the savings bank deposits, so it is, as you all know, that 5%, 4% and others. So, so returns is the most important thing. And many people, those who are misguided by the Panji schemes, those who those who promise them to get 30%, or if you invest 1 lakh, after 5 years you are going to get 20 lakhs. So without considering or without, sort of, understanding the issue that nobody can guarantee you 40%, 50% or 30%. So something is fishy or something they are trying to fool you. So, but people listen to them and put their lifelong savings into that, and they lost their money. So that happens in many places in the country, even including Odisha. So the returns, one has to be very careful that when the stock market gives the best return, and after that mutual funds, then your company deposits and others, and even the fixed deposits. So how can somebody gives you 30% or 50%? So that is not possible. And safety is also one factor. So the return higher you, the safety factor, if you put in stock market, so you there your funds are not safe.
Bera Babu unmute karanto.
But,
Bera Babu mute karanto.
But if you put in, let's say, hi Padma, if you put in, let's say mutual funds, it is a bit safer in the sense that though it gives you less return, but it will give you definitely safer bets. And liquidity is everywhere there, so you can sell the shares, buy the share today, tomorrow you can sell. If you are lucky, you can make profits, or you have to book losses. So that all happens. So liquidity is everywhere, it is there, whether it is stock market, whether it is in banks, but it is not that liquid if you put your money in real estates, lands. So there it takes time to dispose of your assets and get back the money. Next slide, please. So as I said that it depends from person to person. How much risk you take, how much safety you want, and how much liquidity is there for you. So this is the risk reward matrix. So there is high risk and low return. So such products are not available. So in securities market, the derivative products are there, and equity oriented products where the risk is high and returns are also high. Or schemes promising unrealistic returns where capital itself might perish. This is the Ponzi schemes. So this is the Ponzi schemes, and the schemes by all fraudsters, they are doing it. So please be aware of this thing. And bank deposits, post office savings, public provident funds, debt-oriented mutual funds. So there the risk is less, and so also the low returns, the less returns, low returns are there. So this is the 4 phases of the risk reward matrix. Next one. Next slide, please. Yes. So everybody should remember these are the things. Investment is not a gambling. It's not a gambling. It's the share market is not a gambling. Why share market is not a gambling? Because many people, those who have made money like Warren Buffett's, your Junjunwala, your Bansali and others, the big investors are there. So they do not consider that share market is gambling. So it is a place where you need to take very prudent decisions through your knowledge and research. And you must know when to buy, when to enter the market and when to exit the market. Meaning thereby, when to invest, when particular share at what price and at what price you should sell those shares. So what people will do, that herd mentality is that when the prices of a share is increasing, so they buy. And the price, so because they do not have their own knowledge or knowledge, so what they do is that they go by hearsay or somebody giving the tips. So please remember, investment is not gambling. It is a sort of, you need to have a very good knowledge about the market, then only you enter. And your effort, put your money for work for you. You should know that whatever effort, money you are doing it, that investment, so it should work for you. You need to make, what do you say, that you should make profits out of it. So everybody should know that, you should know that how your investment, where it is going and where you are putting your money. And what are you are investing? You should know that which are the shares you should invest. What are its business prospects? What are its export potential? And what are the management? You see, the managing the particular company, and whether they are following a corporate governance norm or they are taking prudent decisions. And you should also know with whom you are dealing with. And in case you do not know, you must know this thing. And in case something goes wrong, where to go for help? Whom should you approach? So these are the things one has to remember. Any investor has to remember. So don't blindly invest in a particular shares or mutual funds. So you need to have proper homework and knowledge about this thing. So self-help is the best help. Next. Next slide, please. Yes. So this is the securities market. Securities market, one is the primary market, and the secondary market is the different segments of the securities market, mutual funds. So here in the we have equity. The products are available are equity, the shares, the mutual fund products are the units of mutual funds. We have derivative products. Basically, the HNIs, high net worth individuals, the buy bonds and debentures. So they are also securities market products, and also the FPI. They are also doing that. And also you have alternative investment funds, REITs, InvITs, real estate investment funds, and infrastructure investment funds. Units also you can buy. But these four products are popular among the retail investors. So we can categorize ourselves as retail investors, because with the limited resource we have to reshuffle our portfolio objectives or investment in such a way that you get the maximum profits, maximum returns, not profits, maximum returns. But those who are the HNIs, high net worth individuals, those have a huge corpus of funds. So they go for derivatives products, or they invest in alternative investment funds, and they go for hedge funds, they go for private equity. So this is what they do. So next, please. Yes. So the primary market. So we know that what is primary market. So primary market is basically the IPO. People come in the IPO market. So it is called the public issue, initial public offers, and the existing shareholders, they get the rights issue. Suppose if you have subscribed to Reliance company, and after a few years, so they issue the rights issue. So you are only eligible, not the fresh individuals. And preferentials and bonus issues are also issued to the existing shareholders. So among the public issue, as I said, that initial public offerings, IPOs, FPOs, further public offerings, and in initial public offerings, you have fresh issue and offer for sale. Like the NSE is shares that are trying to offload it, those who have already invested. So they will do it through offer for sale. Further public offerings means it can be press issue or offer for sale. So the offer for sale is there. So an unlisted company issues existing securities to the public. Next, please. So here in the primary market, you have, you get the forms and you fill up this thing and submit it when the new issues are coming to the market. So many people, those who are invested earlier, they have made money. So not that all IPOs will open at a high price. So some IPOs also, when listed on the stock exchanges, so they make losses. So that is the reason that you need to, as a prudent investor, so you need to take precautions to see that your investments fetch you good returns. Next, please. Yeah, this is the ASBA. Earlier those who are sending their applications, IPO applications through that applications with a check, so they were facing a lot of problems. If they do not get back the refund of the checks, and sometimes it is lost, and the company takes their own time. So now SEBI has come out with these solutions. This is called ASBA, application supported by block amount. In nutshell, I will tell you that suppose if you are applying for an IPO of a particular company, let's say X, you don't have to deposit the money, only you have to have there in your bank account. So in case you are alerted that X amount shares, so money will be debited from your account and shares will be credited. So there is no question of refund issues, no question of lost in the transit and others. So this is a very unique proposal which SEBI has done, and many investors, they are happy that their money is not lost, and that is they are going to get from the bank only. Next, please. So this is the primary market, ASBA. Next slide, please. Yeah, the basis of allocations, not that everybody gets. So might be you might have applied last time, let's say the public issue of LIC. Not everybody gets, those who are having the policy holders, they have got it. So let us see that how the allocation does. So if it is a good issue, many shares, you might have heard that it is subscribed 10 times, 20 times, 50 times. So it is on the basis of the proportionate allotment. That SEBI actually ensures that all retail investors would get a minimum bid, subject to availability of the aggregate shares. And the subscription is based on the shares of retail category. The different categories are there. The shares are reserved for, for mutual funds, for financial institutions. So this is on the basis of the allotment. So you get the shares. Next, please. So one has to remember how you are applying for these IPOs. So what precautions you need to take. So what you need to do, you must read the offer documents. As I said in the beginning, you must know what the company details, what the company is doing, which are the promoters, what are its business plan, whether the company is going to do. So many people, those who understand this thing, let's say tech company is going to like Infosys, TCS, or other tech company, SCL. So they know that the business prospects are good. They have also overseas business operations. So they read the documents, understand who are the promoters and how they are taking it forward. So please read the offer documents, and you get the date and timestamp of the broker submitting the applications, and you recheck your PAN, Demat account number, bank account number, because the details which you fill in the application form, so that will be there. So in case you get back, get the amount refund, or your Demat account, you get the shares allotted. So it is there should not be any mistake. What you should not do is that don't give wrong or contradictory and incomplete information in the applications form. Okay, so please do not do that. Otherwise, you yourself is going to be in difficulty. And also, you should not submit multiple applications. Now there should be one application in your name. If your family members are there to apply for this, let them apply in their name with different account, demand account number, different PAN and different bank account number. Okay. So next, please. So these are the typical offer documents. So the IPO issues come with offer documents. So it is put in the SEBI website, company's website, where the issuers company, merchant bankers and exchanges, and physical copy also is available with the merchant bankers, and abridged summary of the IPO prospects are also available with the application form. So important points one has to understand is what are the financial of the issuers. As I already said, and the risk factors involved in this thing, and the object of the issue, outstanding litigation if it is there with the company, business review, and other things. Next, please. Yeah. So this will skip because go to the secondary market. Next, please. Next, please.
Porcupine, sapo, sabu dele dhariya. How nahi keta oda.
Next, please. Next slide, please.
Nahi bo. Kau pilanu bhaya bhaya. Tang ghare kukuro thila na, kukuro dhotula.
Next slide, please. Yeah. This is how the secondary market operates. After shares are issued in the primary market through IPOs, so the shares are listed on the stock exchanges. So the market intermediaries, those who are associated with this, are depository participants, clearing corporations, brokers, and others. So the secondary market is a place where the shares of the traded. So either you buy from the primary market through IPOs, or you can buy or sell from the secondary market. So secondary market is basically you have NSE, National Stock Exchange, you have Bombay Stock Exchange. In commodities, you have multi-commodity exchange, and other 2-3 exchanges are there. So there, even if suppose in case you fail to get IPOs, so you can go to the secondary market and buy this thing. So how it operates? So it operates like that. First, you put a placing order, and in the secondary market, you need to go through a broker, authorized broker, and who is registered with SEBI. Okay, or you can do internet trading. Them and the trading terminals. So now there are only 3 or 4 exchanges operating in the country. Other regional exchanges, those who are there, Guwahati, my friend is the Guwahati exchanges were earlier there in 92, 93. So now Guwahati Stock Exchange is not in existence. Calcutta Stock Exchange not in existence. Bhubaneswar Stock Exchange not in existence. So no other exchanges are there. There are 2 big exchanges. That is the National Stock Exchange of India Limited, and there is the Bombay Stock Exchange. Bombay Stock Exchange. So these stock exchanges, they have trading terminals or brokers operating in different parts of the country. Not only in Mumbai, but in every city you have brokers are there, trading terminals are there, so you can go and do business there. So how it operates, you place the order through a broker, then the trade execution takes place. Earlier that physical trading was there, now it is online trading. The technology has played a major role of deciding, executing your orders. Okay, so you come to know that at what price you got the deal, and how many shares you have bought or sold. So nobody can sort of misguide you. So earlier occasions when there was no technology or no online trading, so that time it was very difficult to know that what price your broker has sold your share to somebody else, and whether you are getting the required amount or not. So after trade executions, there are clearing of trades. So the clearing of trades takes place through clearing corporations. Both BSE and NSE, they have their own clearing corporations, and the clearing houses are there, and also clearing banks are there for making payments. Then it goes to the trade settlement of trades. Then you have the funds and securities. If you sold the securities, then you get back the funds. And if you bought the securities, you paid the funds and you get the securities. So that will be in your account. So this is the transactions cycle which takes place in the stock exchange on the floor, the trading floor. So everything is computerized. You can see online, I mean, how this is taking place. It's an order-driven system. Next, please. Yeah, this is how the secondary market takes place. This is exchange, clearing banks, then clearing members and custodians, the depositories. Okay, so this is how the entire trading takes place. Now T+2 settlement was there. Now it is coming to T+1. So for certain categories. So you have the pay in and payout, and if you have sold the shares, your account will be debited, your demat account will be debited. It's just like a bank passbook. In that passbook, you demand your if you have sold the shares, your account will be debited with that shares, and the money will be credited in your account, bank account. So this is how it takes place. And within 48 hours, you get your shares and funds. Next slide, please.
I think it is over now. Is there any slides?
Okay. So this time is up. So this is how we need to take the mutual funds is there also, where the small retail investors, they can put their money in the mutual funds, and the investment decisions are taken by the experts handling the investment this thing, and but the returns which you get less, and there are different types of mutual funds also available. Now there is the liberalized era. They have put both private sector, public sector in foreign mutual funds are there. So they are guided by SEBI guidelines, and they are supposed to get registered or licensed from SEBI. So this is all of the mutual funds trading, secondary market and primary market. And about the investor grievances, those who have the grievances, so we have the score system where you can lodge your complaint and it will be attended to. And the judicial mechanism is the SAT, which I have discussed in the earlier. So there is SEBI is also taking out the investor educations and awareness program in almost all the cities and state capitals and tier 1 and tier 2 cities. So this is how the precautions you need to take, and the investors should be aware of their rights and how to deal with the stock exchange. So with this, I will conclude here. So thank you very much for giving me this opportunity. I hope I am able to explain you about the functioning of the stock market, but actually it needs some more time to discuss about the foreign portfolio investments, the REITs and InvITs, and other equity funds and others. So thanks a lot.
So thank you, Malik Babu. It's a nice learning experience for all of us, especially for the beginners. And it's a never-ending subject. So more and more research have been done in this subject, and we will be soliciting your assistance and cooperations for educating us financially, as you rightly told, in this area, as and when the OCFO participants are requiring. And you have nicely explained the investor protection, investment strategy, that is avoiding the leveraging. Leveraging is a very dangerous task in this area, and everybody should have also the strategy they have to make, whether they are investing in mid cap or large cap or the small cap, value stocks or aggressive growth stock, and risk reward return matrix. You have nicely explained. We should avoid from the Ponzi schemes. Things to remember also, your investment is not a gambling, that you have explained very nicely. And you have lucidly explained about the primary market and secondary market, about the application supported by blocked amount. That concept also many of us We learned it, and basis of allocation in IPO and do's and do not while applying for the IPOs. Offer document averaged summary, one should read it. How secondary market is functioning and its transaction you explained. All these things are very rich knowledge gaining experience for all of us. We once again on behalf of the Odisha Corporate Foundation express our heartfelt thanks to you for sparing your time and coming over and educating us. If anybody is having any question or one or two questions, you can take it. Otherwise, we will call it a day. Participants are requested to unmute and ask any questions you would like to ask. Okay, it seems there is no questions from a participant side. So I will request the webinar as closed. Thank you for coming all.